Hello everyone, and it's just another day in the world of financial markets. And as you know, for some time I've been calling for a major top in oil, for gold to appreciate, and it looked like it was going to for a little while. It hasn't quite yet, but I think you just have to be a little bit patient on gold. One thing we've learned recently from stock market behavior is if there's economic shutdowns and the economy is going to fall through the floor, you buy stocks. As a friend pointed out to me this morning, one of my old sayings, once everyone who wants to buy has bought, it can only go down. And the other saying is that of mine is that what all the buyers out there and all the longs out there don't realize is that they are in fact nothing but a sea of potential sellers. Now, some are doing very well. They've bought the yacht. But others aren't doing quite well because we did have a lot of volatility on the way up here for stocks, US stocks. At the moment though, the volatility is dropping away. Things seem to be calming down, but you never know quite when they're about to stir yet again. So there's only one thing to do at the moment. Respect the upward price action, particularly in the tech stocks in the US and the big global brands. If you see range breaks to the upside in stocks like Disney, that's going to be a very good confirmation that it's a reliable uptrend. Until you see that though, and that's what I'm using as a little bit of a canary in the mine, if you like, until you see that that Disney break to the upside, it's still all a little bit, I'm going to use an advanced economics term here, I hope you can all stay with me, it's all a little bit iffy. It's new highs, but it's not runaway market, but it is steady gains. And that tells us that it is steady buying, and that buying is coming from largely offshore. We know the US has had a massive trade deficit. We know that a lot of US funds recognize the overvaluation of US stocks now relative to the US economy, just in its absolute terms and how it's functioning at the moment, let alone, that's not even including the risk coming from another Delta surge. And yet the stock market just keeps marching higher. And why we're seeing yields fall at the same time the stocks are going up is because it's all safe haven flow. So it's safe haven into the US Treasury market by US fund managers out of stocks. And then it's safe haven flow from the rest of the world, because you've got to remember there are a lot of wealthy parts of the world that are suffering extremely from the latest Delta surge in COVID. And by the way, there's a report out of Israel in the last 24 hours or so, I think, that the efficacy of 2 Pfizer shots there has dropped as low as 40%. They're asking people to work from home again and talking about the third booster. So there are still plenty of risks. So where does this endless run to the upside stop? Well, I guess while Delta is surging, there's going to be more coming from the rest of the world to the US stock market, keeping it stronger. And inflation, as we know at the moment, is being driven by the freedom of pricing, which is good for stocks in the short term, as I pointed out some time ago. But you never know when the wave's going to crash and take me out and take out a lot of this really froth-driven stock market behavior at the moment. In the US, we've seen the economy get shut down, stocks move higher, and I think that particular market, the Australian market, is very vulnerable at the moment. In fact, I'm going to be selling Australian stocks this afternoon. All the best for your Friday afternoon. Clifford Bennett, Chief Economist, ACY Securities.